So one of the mods in my chat thought it would be a really good idea to have a Q&A, and I agreed. I think that would be good because I think a lot of people out there have a lot of questions that either weren't getting answered or very specific things they weren't sure about related to the Wallstreetbets drama that's happening right now. And so I created a channel in the Discord saying, post your questions here. We ended up getting quite a lot of questions, which is fantastic. And I can't wait to answer some of them. So let's dive in. Okay, so first question. Based on the chart data and trend of the stock, will holding alone create a squeeze? If no, which I suspect, then do you think we have enough buying power left in us as a movement to create a squeeze? So to answer the first part of your question, that depends on one single number, which is the fee that you have to pay the bank on a yearly basis, the percentage interest that you owe the bank for holding those shares that you shorted. Right? Because keep in mind, you don't actually own those shares yet. You just are taking a loan from the bank and paying them interest as you hold it. The longer you hold it, the more you pay. So you can see here on this chart, AMC, for example, had a fee of 131% on 12/23, which is insanely high. If you look at Amazon, for example, you'll see that it's just a flat 0.3%. Why? Because nobody's shorting Amazon right now. As I pan across, it's always 10 million. Just no one's shorting Amazon right now. That would be somewhat silly. So if we go back to AMC, you'll see that this interest rate is actually going down, significantly going down. So 140%, insane interest rates. You don't want to hold that for very long because even if you double your money in the course of a year, you still lose money, right? Like that's just not something that's sustainable. This is not good because as you can see, the fee percent right now is 3.8. It's still higher than normal, but not that much higher than normal. So a squeeze for just holding is likely not going to happen just because of that percent. Now, if we look at GME, you're going to get a little bit of more interesting volatility here. It goes all the way up on just 126. There was 83.6% fee for borrowing the share on short. Now it's down to around 8.9. Now that's still high, right? 8.9 is still pretty high interest rate, but I, as a giant conglomerate, am going to just hold, even if I'm losing 8.9% of my money. If I think there's going to be a small, quick trend, then it doesn't bother me to just pay 8.9% on my valuation because it's likely that in the future I will make that money back. So no, I think currently just holding will not create a new squeeze. We would have to either purchase more shares to create that demand, or the amount of people shorting would also have to go up at least enough to create a higher percent. So then part two is, do I think that people have enough purchasing power to create that squeeze still left in the movement? Personally, I think probably not. I think a lot of people have already started bailing. That was definitely one of the biggest risks that I called out in my first video was, do I think that Redditors will hold the line? Now, due to the manipulation that we saw, the downward trends, people weren't expecting that. They weren't ready to hold past that. I was kind of, initially I'm hoping that didn't happen, and we only saw the price like just trickle up a little bit and then hit that spike. Instead, what we saw is a significant drop before we hit the spike. And so I think that a lot of people have kind of checked out at this point, and I think probably we do not have enough momentum left in purchasing power to create another short squeeze, but I could be wrong. And in fact, I had somebody come to me today and show me some statistics that shows that due to this extremely high volatility, a squeeze could be coming in the near future, but again, nothing's guaranteed. So thank you, Mandrake, for the question. The next question I'm going to be from Sathars, if I'm saying that right. How did you end up getting caught up in all of this? What is your experience with trading in general? This is more of a getting to know you perspective, not from a why should I believe you perspective, just to be clear. I like the caveat though, I really do. I personally am actually not a very frequent day trader. I don't look for short-term trends. I don't actually trade in that style. I tend to have like just long-term bets, long-term portfolio. But I think this was interesting enough to get involved in. When someone told me about the AMC GME short squeeze, I wanted to do my own research, of course, into it. And when I was doing my own research, it did seem like, wow, this is actually something that's very plausible. Now, I am obviously very late to the show. I think the show really took off when it was discovered more than a year ago, or even way back when Michael Burry put his giant share in the GME stock. I think that was more the prime time to get in and investigate, but sadly, I didn't even find out about it until much later. I would say that I got in this because what I heard piqued my interest and I wanted to do some research. And then when I did my research, I figured I wanted to share my research, and that's That's how I'm here. But what's my experience in trading in general? I've been trading since I've started making money. So that would be around 10 years ago. I started my first retirement fund. And then, creating a Roth IRA, etc., which if you don't know what the Roth IRA is, I definitely recommend that you look it up because it is a tax-free account where all your gains in a Roth IRA are non-taxed. So if you gained $1,000 in your Roth IRA, you do not get taxed on it, whereas in a standard investment account, you do get taxed on it. Maybe a topic for another video, but I actively trading in terms of like doing my own research, I would say that was about 6 years ago. But why you should believe me? I mean, you shouldn't, right? Do your own research. I'm just here expressing what I've learned, what I've found through my research and trying to inform as many people as I can. And yeah, that's my goal. So my goal, I don't have an incentive other than that. And so that should probably give you a good reason to trust me. All right, the next question we have here is from WooX Master, very active in the Discord. If there will be no squeeze, what is going to happen to AMC? Not from a realistic perspective, because I personally do believe cinema has a bright future, but from a purely financial perspective. Will their funds really help them through the months ahead? Will they be profitable again? And most importantly, can the short sellers cap their knees and force their stock into the ground to make profit off them like they did with other companies and tried with GME and AMC pre-Reddit hysteria? So, I mean, what I'm about to say is all speculative, right? There is no guarantee what happens to AMC. So almost certainly at this point, I personally would be looking at financial statements, right? So AMC, by being a public company, has to report quarterly results and yearly results. What I would do is probably look at like third quarter, because Corona hit at the end of 2019, and at which point data might be a little bit skewed. But if you look at third quarter 2019, you can see total revenue, $1.3 billion, up 7.8%, which is good. That means they were growing at that time, from last year, sorry. Net losses, they've decreased their net losses. So all things seem to be pointing like, oh, this company is probably going to do okay for the next foreseeable future. Go through this, understand what all these things mean. There's a lot of content in here, especially in these parts. You can see how much a company owes, their debt, what are their long-term liabilities, how much total assets they have. A lot of this is speculative too, right? Like how they're making the seats super comfortable now, and it's just like seems more of a catered experience rather than just like kind of trashy experience. I think that is probably a benefit or like a positive for their future. Do your deep dives into the company, determine, hey, is this going to be something that lasts for some time or is growing in profit? Something else to consider, even if they're not growing, it's okay as long as they're paying you dividends, basically paying you to keep money in that stock. But AMC's dividends are not that high. 0.2% is fairly low. That is not something that you should factor in the equation for AMC, but it would be for various other stocks that are maybe stagnant. Like if you're investing in oil. But if you are, then you're probably looking at dividends, not growth. And lastly, you asked, will they be able to basically kneecap this company just by continually shorting it? AMC already has enough capital right now in order to keep its function going. And assuming that's the case and they don't have to sell shares in order to stay alive, then the stock price really doesn't matter to the company, right? In that perspective of like survival. So no, I think you can't continually short a company and kneecap it to the ground, assuming that they have debts and the company was planning on selling its shares in order to cover those debts. Then yes, shorting and continually shorting can in fact kill a company because you've basically driven their stock price down to zero and there's no way that they can now cover the debts that they own. But with AMC, I don't think that's the case. And actually with GME, that's not the case either because they both have secured capital to survive the foreseeable future. So I would not be worried about bankruptcy being filed anytime soon for either of these companies. Okay, next question by Big Duck Swinger. How could have this situation increased short percent been predicted by hard data and maybe something on data and tech analysis in general? Okay. So first part of your question is, how do we identify that a stock is over shorted? This is public information, right? So here you can see, and I've touched on this before, but basically companies are required to report how many shares they've shorted. And by companies, I mean financial institutions that have a certain amount of capital. They're required to report their total shares sold short twice a month. You just aggregate all those numbers that have been reported and you get numbers like this, right? Now this is plus or minus a certain amount because individuals don't have to report it if they have under a certain amount of capital. Given the fact that these big companies are, taking millions of shares on short, this is more or less right. And so you can just see, the trend over time of how many shares there are shorted. And so somebody just was looking at the chart, scavenging around the internets and saying, hey, what are some of the most shorted companies there are? GME happened to be one of them. And so that's when the GME train started happening. And then people are like, hey, what are some other companies that have been shorted? And of course, you see something like AMC and you're like, wow, this is actually a really high percentage of the total shares that exist. This is a lot of money, a lot of dollar volume sold short. So, where maybe perhaps there's something here to be investigated, and then you do a further deep dive and you figure out, hey, this is something that I think I can take the other side on. But to answer your question in terms of tech analysis in general, there is a ton of resources online that's publicly available information. I just showed, for example, these quarterly results for a company, and so you can scavenge these. You can look at things like, even this, it's like it shows how much the fee of is shorting. Like there's information everywhere. It's just you need to kind of know what to look for, because it's an aggregation of multiple data points that kind of paints a picture in your head that says, hey, you know what, this company's valuable, not valuable. There's a potential for a short squeeze, no potential for a short squeeze, etc. It depends what you're trying to do. It depends what companies you're looking at, and it depends what sort of like financial instrument you want to use to try to make profit. But there's a ton to learn here, right? And it'll take a lot of time, and it'll take a lot of experience digging through these things and starting to learn what all these values mean in financial reports. Yahoo, of course, very easily publicly available, has a ton of information on a lot of these statistics. Taking all these into one, painting a picture in your head and saying this is good or bad is exactly what you'll eventually learn how to do. Also, looking at these is exactly how Deep Fucking Value knew that this was overly shorted. It's just public information. Okay, this next question comes from Ben. It is very long, so I'll just summarize it really quickly. I've wanted to get into investing. I thought at first I'd just listen to what other people tell me I should invest in, but I also don't know where to start learning. And one thing he says here is I've been looking into getting some money fast. So let me, kind of crush your dreams here a little bit. But you can't make money quickly investing most of the time. Usually, unless you're doing some really deep dives and you're getting into investing, and after some time of investing, then you can start finding these opportunities that are just like money makers. But if it was easy, everyone would be doing it. And if everyone was doing it, then it wouldn't be profitable. So it's not an easy thing to just make money quick in investing. Me personally, I invest for the long term, right? I invest in my portfolio so that in 10 years time, I can retire, something like this, right? And you got to set your own goals, and you have to have your own risk ratios, set your own risk ratios. Because for example, my parents, much less willing to throw their money into a higher volatility portfolio. They'd rather just keep a low and steady 3% per year, 5% per year, where I'm looking for more like a 10 plus. So what do you invest in if you're looking for a 10 plus? Another great question. I think like what will happen is we'll have to have another video at some point that just says like, here's what you should do with your money if you're looking for a low effort investment that'll probably make you money in the long term. And that answer really quickly is just like invest in some diversified ETFs, right? Invest in some ETFs that basically mimic the stock market, and you should be okay. In terms of learning though, just simply Google Investing 101 and you're going to get stuff, Udemy links that are saying the complete online investing course 2021. Investopedia has their own little how to start investing in stocks, a beginner's guide, and it goes over what are brokers, what are robo-brokers or robo-advisors, investing through your employer, commissions, fees, stuff like this that's just like you should know before you start investing. NerdWallet also has their own investing course. There's also a ton of YouTube videos that'll give you crash courses. I, of course, don't have that content yet since I've just started making videos about 2 weeks ago. But, as you could see me making some little tip videos in the future. And of course, our Discord is open for questions if you are going through this and have questions. But definitely, you're going to have to read. You're going to have to put that time into getting up to speed. And there's different levels of investing, right? To make money quick, you have to learn a lot and do a lot of deep dives. To make money slow over time, you really don't need to learn that much, right? You just kind of let your money sit and it'll grow over time. So it also depends on what kind of investing that you want to do. Yeah, and as Nick W. put in underneath, honestly, the internet is your oyster. Too true. Too true. Okay, at this point, we're already reaching 15 minutes. I have recorded already some of the additional questions, but I think what we'll do, since I've already also received new questions in Discord, is throw those in together with another part 2 Q&A, and then I'll deliver that video sometime tomorrow or the next day. So if you're watching this and thinking, hey, I want my questions answered, well, hurry up, because again, I'm going to be making a video in the next 2 or so days. Get your questions in, get on the Discord, ask your question, and I'll try to answer it in the next video. Link to the Discord is below. Please, if you like this content, if you like my style, give a like, give a subscribe. I really appreciate it. And I'll see you for part 2. That was awesome. Thank you everybody who submitted questions, and I was very excited to, hopefully this helps answer those. If anybody watching has questions, feel free to join the Discord. It's in the comments below. Feel free to post questions in the Q&A. I'm definitely going to be doing this again because I think it was so much fun, and I think it helps a lot of people in the community. And it's kind of nice to be interacting with the community more so than just making my own videos where I have to think of what to say. Instead, you tell me what to say, which is great. So as this GME and AMC stock frenzy kind of dies down a little bit, it's definitely not even close to over, but once it dies down a little bit more, we plan on kind of pivoting to different topics around different aspects of society and politics. And so, but it's similar format where it's going to be a lot of information, a lot of data-driven stuff. And if you're interested in that at all, please feel free to subscribe. It helps me a lot. It keeps me motivated, and can't wait to talk to you guys soon.